Good evening and welcome to the regular Board of Finance meeting of March 21st, 2024. We are here to receive the report from our auditors. Please rise and join me in the pledge.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
We have with us tonight Nicoletta McTighe and Jessica Aniskopf, the town's auditors from CLA. We also have with us Kelsey Chamberlain from the Finance Department filling in for Amy Merriweather. So with that, we'll get to the business at hand, which is to receive a review and report of how the audit went. So thank you.
Do you want to, is it here?
That's fine. Are you gonna put the slides up or are we just gonna leave these? I sent it to Amy. It's fine if
She
it's
didn't
not.
send it to me,
That's
but
fine.
we can always scroll down on here if you want.
Oh, it's up there.
Oh, the whole presentation?
Yeah.
Yeah, okay. Yeah, I can do that. No, that's okay. I just didn't know if I needed to.
I'll have Jessica get started.
Yep. So I'm gonna scroll through these. So I'm gonna go past our second slide, which is all the legal stuff that we have to put in our presentations.
So if you just use the right arrow when you stop on a page, it should switch pages for you.
Which right arrow?
It's an Okay.
It does for me, sorry.
it's an Adobe knockoff.
Okay.
I don't wanna
yeah.
break
Never
it.
mind.
Technology and I don't always get along, so we're gonna just make this work.
It's all good.
Alright, so I'm gonna go through the terms of the engagement, the executive summary, some high-level financial highlights, the federal and state single audits, our required governance communication, our management letter, and then some upcoming GASB pronouncements. I believe Amy sent you all the drafts and we're coming tonight with drafts, with the only thing that is open is a couple attorney updates. So once we get those, we'll be able to lift that draft print and issue, as long as nothing comes back in those attorney letters that's gonna change or need additional accruals or disclosure. We don't expect that, but until we have those, we can't say 100% that nothing's gonna change, but just to give you an update as to why it says draft still, we're very close.
When you are done, could we get hard copies for the board, please?
Yeah, yep, I think we've done them in the past, right?
Yes.
Yeah, okay. Let's go down to the next one. Alright, so the
Transition.
I know, sorry. You wanna have me talk and you can scroll and I'll
Sure.
keep going? You gotta switch. I don't know that it's gonna reach. Alright, trying to be more efficient here. So as far as the terms of the engagement, CLA is hired to express opinions on whether the basic financial statements are presented in accordance with GAAP. We also have an in relation to opinion for the schedule of expenditures of federal award and the schedule of expenditures of state financial assistance. We also express opinions on major federal award programs and the major state award programs on compliance related to those. We provide a report on internal controls over financial reporting and compliance with laws, regulations, contracts, and grants that we sometimes call the yellow book letter, if you hear it referred to as that. And we provide a report on internal controls over compliance related to the major federal award programs and state programs that we test. So as far as the financial statements go, the town received an unmodified opinion on the financial statement, which is the best opinion that is available. We had no findings on the internal controls over financial reporting. And for the federal and state single audits, they both also received unmodified opinions on the federal.
Can we ask as we go along?
Yeah, if you would like to.
No findings reported on internal controls. What does that mean?
So when we're doing an audit, we have a responsibility to document the controls over the different areas that we look at, so like cash, investments, we'll document the controls. Then we take another step and we kind of do a walkthrough of those. So although they're telling us, you guys are telling us what the controls are, we do the next step and make sure that they're being followed. So on the controls that we tested of the audit areas we looked at, we didn't have any findings where the control wasn't in place like we were told it was.
Oh, it says no findings were reported. And
So it was a clean report. So if you notice a difference in language for the financial statements, we are saying we express an opinion on the financial statements. We do not express an opinion on internal controls. We review the internal controls as part of doing the audit, and if there are any findings, they are going to be included in that internal control over financial reporting
It's a financial
document.
language kind of thing. When you say no findings reported, I would
Which is
assume that
good.
you found nothing, and therefore we have nothing to go on. But what you're saying is there were no negatives reported.
Correct, because that report is supposed to include any findings that were related to the internal controls over financial reporting.
Thank you.
No news is good news.
Right, that is true. And again, we had no compliance findings, significant deficiencies in internal controls over the programs that we tested under the federal and state single audits, which I'll go through individually in a couple more slides.
Can I just jump in? What, over the areas that you tested, that implies there were areas you did not. What are the areas that have not been tested, and do we need to look at that separately at some point?
So when we start the audit, we do a risk-based approach, so we look at any area that is, lots of transactions or any high risk. Like, we're always gonna look at the tax collector's office, because that's where most of the income revenue comes from. So we do an analysis over all the areas of the town. If it's going to be material in the financial statements, we're looking at it.
So areas that are insignificant to the financial reporting, we might not look at it in as much detail because there's not a risk of material misstatements that we have to be concerned while we are doing the audit. But for the most part, anything that is material and considered significant audit area is included in our procedures.
So up on the screen in very small print, which you also have in front of you, is the governmental statements. Now, these statements are on the government-wide statements. These are on the full accrual basis of accounting, so they include your long-term assets and your long-term liabilities. It includes everything for the town. So just looking at total assets, in the prior year was $214.9 million compared to $224 million this year, with the biggest change being the Latimer Lane renovation, which is in CIP and capital assets. That was about 10 million-ish. I should have also mentioned there's two categories on this statement: deferred outflows of resources and deferred inflows of resources, which are specific to governments. What those two categories are, they're mostly related to pension and OPEB. So rather than flowing the whole change of your pension and OPEB liability because of different assumption changes or market changes, instead of hitting your income statement all in 1 year, they go into these categories: deferred outflows or inflows, and are amortized over maybe 5 to 7 year period. So that's what those two categories that you might not see on any statement except government statements.
A quick question
Yep.
before you go on. When you do the net investment in capital assets, it's about 126, and that's net of depreciation, right? Is that inclusive of depreciation?
That calculation starts with your capital assets, less depreciation, less your debt related to those capital assets.
So when we think about as a municipality how much we should invest in capital to keep up our assets, is that a number that is relevant to us to evaluate?
That's the amount that already is invested in capital assets. So it basically tells you out of $136 million that you have in that position, 126 is already tied up with fixed assets. So you cannot do anything with that.
No, I meant in terms of if, like, every year we should invest in capital improvements. Is that a number, I mean, this shows us what our net value is, so should we invest 10% of that every year? I mean, is that maybe beyond the scope of what you guys think about?
So just if you just look at one big number, $126 million, coming up with percentage for that number is probably not the best way to plan forward. The best way to plan forward is, what do we need? Do we need a school? Do we need a road? Do we need a bridge? Usually governments don't look at increasing the capital assets as a percentage of what is in existence. It's more of what do we need to go forward from based on our experience with working.
Yeah, I was just thinking for
with them.
maintenance of existing assets.
Yeah, so that is more on like the budgetary part of the financial statements.
Not
where
for
the
not
discussion
for our
goes in. Yeah.
auditors.
I was trying to find a backdoor into that
Right.
number too, so thank you for asking that.
All right, so just to go back to the total liabilities, it was 94 million last year to about 90 million this year, with the biggest change being about $6 million that you paid down on the outstanding debt this year, which leaves the town with an increase in total net position this year from 126 million to 136 million. So the next slide is your governmental funds. So these columns represent all the major funds of the town, and then that non-major governmental funds column is all the smaller funds that are in the back of the statement. So I think Simsbury Farms is back there, Public Safety Fund might be back there, but all of those don't meet the criteria of a major fund, so those are aggregated into that non-major governmental funds column. So just to start with the general fund, there was a decrease in fund balance from 20 million to about 19.8 million. It was fairly consistent from last year to this year. The sewer use fund started the year at 7.3 million, ended at 8 million. The Board of Ed programs fund had an increase of about 118,000, ending at 799,000. The capital project fund actually is shown as a deficit right now, which is not uncommon for capital project funds because the expenditures tend to go out the door and then a bonding or grants will come in afterwards and make that fund whole again. So the beginning of the year it was about 4.3 million, and now it's in a deficit of 1.6 million. And finally, your ARPA fund has no fund balance, and that is because as expenditures are incurred for ARPA, the revenue is matched to that, so that fund is really always gonna have a zero fund balance as you spend down the ARPA funds. And then finally, your non-major funds had an increase in fund balance from 5.3 million to about 6 million in the current year.
Just to pause for a minute, or any questions from members?
I'm up here.
So the next slide just goes through the general fund balance. So the fund balance, as I stated before, is about 19.9 million. Non-spendable portion is obviously something that's not spendable. It's non-spendable. It's already spent in this case. It's prepaid for 138,000. Committed for education is 651,000. I believe that's your there's a separate fund that has been set up that moves that 1% of the Board of Ed budget.
Non-lapsing fund.
Non-lapsing fund, thank you. That gets combined with the general fund, but the fund balance stays separate under the classifications. And then under assigned, there were town encumbrances of 23,000 and Board of Ed encumbrances of 45,000, leaving an unassigned balance of about 19 million. So just to go through the budget at a very high level, general fund revenues came in 571,000 above budget. The bulk of that being property tax collections, and those were 639,000 above budget. And expenditures came in at 568,000 above budget. One of the other funds that you have in Simsbury and in your statements is the health and dental insurance fund. So that net position is at 4 million, which was a decrease of about 564,000 from the prior year. So this next slide is the pension and OPEB funds of the town. Are the assets that are accumulated for retirees and your pension funds and healthcare costs in the OPEB funds. It's broken out by the different fund pension trusts that you have set up. So you have general government, police, Board of Education, and then your last one is their OPEB fund. So the general government pension fund had an increase in fund balance this year from about 26.3 to 27.5 million. Police pension fund went up from 19.6 million to 20.4 million. The Board of Education fund went up 26.5 million to 28 million, and OPEB went up it went from about 20 million to 21.7 million. The investments in these funds are measured using market value at 6/30/23. So if you looked at this at a different period in the year, you may see quite a change depending on what the market is doing. So this is where these funds were as of 6/30/23 and where the market was for the investments. Which goes into the next slide, which just discusses your overall pension liability and OPEB liability. So the total for all plans pension liability is 33.3 million, which you can see them split out below on the slide, which was a decrease of about 283,000 from the prior year. So your general government is 66% funded, police is 76% funded, the Board of Ed plan is about 69% funded. And again, these funded ratios are going to change based on your contributions, but also based on where the market stands. The OPEB liability was about 3.9 million, and at 6/30/23 it was 85% funded. So it's kind of a snapshot in time. So you may be getting different information from your actuaries as the year goes by because they're looking at what the market is doing.
Our last update was it was 100% funded.
Yeah, and that may be just because now we're in March of 24 and we're in a different.
I'm sure I'm missing something, but what's the relationship of these two pages? Because the liabilities are 33, but the funds adds up to 97. So I'm sure I shouldn't be
So
comparing
the
those
funds
numbers.
are the assets that you have set aside for the liability. The actuary calculates a liability and then that liability, what you have set aside in those trusts is subtracted to get the full liability that you have left. So you start with your total liability less what you have in your funds to get to your
So
net
is the
pension
33
liability.
unfunded? Is that how I should think about it on the second page?
I think so.
That
Yes,
bullet at the
yes,
top.
so that's right, that's what
Okay,
is
so the
still
overall
out there.
liability is like 130.
Right, yeah.
You got 97, okay, got it, thank you. I'm an actuary, so I was trying to balance those out.
Alright, so moving, any questions on the financials before I kind of go through the federal and state single audits? No? Okay. Alright, so for the federal single audit, the total federal awards expended as of 6/30/24 was 7.7 million. The major programs that we tested this year was the ARPA program and the I fixed this typo in your slide, but I must have sent it to Amy first. The special education cluster, which should say IDEA. So those are the two programs that we tested. And on those programs, we had no compliance issues or internal control issues.
What was the IDA grant amount? Do you remember?
I don't, but I can tell you.
ARPA was 3.7.
It was 1,073,000. And we have to rotate the programs that we test every year. So if it's over 750,000, we have to test it once every 3 years. And then you have to have a certain amount of coverage, so we kind of go through the programs based on what has been tested and then what coverage we need. So for the state single audit, the total state awards expended in the current year was 19 million, and the programs that we tested for the local transportation capital program, I think we also call that LOTSIP, the tiered pilot and the MRSA tiered pilot, those are tested as one, and then the municipal revenue sharing. And on those programs, we had no findings or internal control issues. So you have a clean opinion on those. Any questions on those? Alright, so jumping into our required auditor's communication, you did adopt a new standard in the current year, GASB 96, which is subscription-based information technology arrangements, or SBITAs as we call them, because that's a mouthful. The finance department did analyze any subscriptions that you had, and they were not deemed to be material for the financial statements, so they're not recorded. This is something that's gonna have to get looked at every year, similar to leases in the past few years. It's going to have to be reanalyzed just to make sure that if you enter into a very large software contract, that if it needs to come into the financial statements, it will. Inherent in your financials are several significant estimates that we take a look at to make sure there's no management bias and they appear reasonable. Your net pension and OPEB liability are generated with a third-party actuary and the assumptions that the town has made. Depreciation expense, the useful lives of your capital assets is determined by management and that is used to calculate the depreciation. Allowance for uncollectible receivables, that's for on your taxes receivable, what may or may not be collected. And then your IBNR healthcare costs, which are again are a third party, your third party health insurance calculates up the claims that were there at the end of the year that maybe have not been submitted yet. So those are the estimates included in your financial statements. Throughout the audit, we had no disagreements with management. They didn't consult with any other accountants because they didn't like our opinion or our questions or anything like that. They didn't bring anybody else in. We didn't have any difficulties encountered in performing the audit. As I mentioned before, leases and submittas, there you will have on your letter when you get a final thing, there will be the calculation of leases and submittas. They're not material, but it's above our threshold to let you know that they're out there, so you will see a past adjustment. It's kind of cost benefit. The extra time and effort to put it in there doesn't necessarily mean that it needs to go in the financial statements because it's not material, but we need to let you guys know that they're out there. Management looked at them. So you'll see a past adjustment form for those items, which again, will have to get looked at every year to make sure that they don't go over the threshold to need to be recorded.
What is the threshold?
That's one of those things I can't tell you again. And that's gonna change every year too, because we have to look at materiality based on the current year numbers every year. And so that materiality, the threshold is, I don't even know, is it 180? Like they just go down. And that inconsequential is the lowest number for us to tell you about, but not have to record anything.
So you can't tell her because it's confidential or because you don't recall?
No. We are not supposed to share that number because.
It's confidential.
Yes, the management is not supposed to know what numbers we are looking at and what our threshold is for when we do the audit, otherwise they'll just take care of only those numbers.
They don't wanna divulge that.
Because they might,
And plus and that materiality number or the threshold is different for different opinion audits, opinions that we are auditing. So the larger the opinion unit, the larger the number is, the smaller the opinion unit, the smaller the number is, but we do not disclose materiality thresholds.
So if I'm understanding correctly, these obligations are not, there's a variance from some standard that's not material, what's the nature of the standard that they've exceeded?
So they've exceeded what we call the inconsequential threshold, which is the smallest amount. If they were under that, we wouldn't even have to disclose it to you. We would say it's just completely immaterial. So this is above the spot where we have to let governance know that it's out there. But
it's
And out
lower
there
than the threshold
right.
that they have to report in the financial statements.
Right.
Yeah.
So it's not inconsequential, but it's what is it that you've observed that is consequential but not material?
Is
So
it the
this
two
is the
bullets that's on,
calculation of the potential asset and liability for leases and software.
Okay, so there's a variance between your estimate and the town's estimate, is that correct?
No, there are assets and liabilities that exist out there that are not included in your financial statements because they are not material.
And those would,
So
And those are for leases and subsidies. So let's say there are probably 200, what's the number there? There are $200,000 of assets and the liabilities that could have been in your books but are not there.
you're saying they're consequential but insignificant?
It's not there.
immaterial.
It's attached.
I think one bullet says it's 256,000, the other one says 206,000, is that right?
So so if you receive the draft of
Page
the
20 of
financial
your draft.
state of all the reports, Under uncorrected misstatements, there are two bullet points there that explain what is not included in your financial statement. So it's right to use assets and lease liability of about $256,000 and right to use subscription assets and subscription liability of about $206,000. So if both of those were reported in the books, your assets in the government-wide financial statements will be higher by $456,000, so would the liability will be higher roughly by that amount.
No, it's clear in the
Yeah.
document. Should have-
And I'm glad you guys are bringing this up because I had noticed it in the draft as well. So you're saying though that it's hitting a threshold for you to mention it to us, but it's not significant to the financials of the organization, I think is your point.
Yeah, so this number would have been reported on that, if you go back, if you have the printout on that governmental activities statement where your net position is $236 million,
Right,
so
this would be-
$400,000 of either asset liabilities, which the net effect on the net position would have been almost zero. It's not,
And you're comfortable with the process that we're using, that like those numbers shouldn't get bigger than it's not random that they're that small, I think is what you're also saying.
So we do evaluate those numbers every year. So we ask every year, are there any new contracts? Are there any changes? And management does rough calculations of what that number would have been if it was included in the financial statement. So I say rough because the exact calculations will take a little math to do, but
Sure,
rough is
sure.
like this over the next 5 years we are paying $200,000. So
And you're comfortable that if for some reason there
Yes.
were $5 million versions of these, our process would pick those up in an accurate way.
yes, the way the management does the analysis of recurring payments to vendors related to either rent or software uses, we are comfortable with that, yes.
Kelsey, could we get a list from Amy of what those are for?
This or Microsoft accounts, the copiers.
Is that what that is?
So no, Microsoft account might not be because it has to be the requirements for reporting assets and related liability for leases and subidas are for agreements that are over 12 months. So if you have a vendor that you pay, you don't have a contract that is over a year, but you go kind of year to year to year to year, that is not required to be reported as asset and liability. But if you have a 3-year contract, then the asset associated with that agreement is going to be reported and the liability. So
Theoretically,
you could
we
have-
approve those because that would be a multi-year appropriation, so I just,
So
Right, so those annual contracts are not.
yes,
annual contracts are
you could have
not, so-
25 of those that there could be even like $5 million, but they're not going to be reported because they are not under the they don't meet the definition of lease or subida per GASB
The multi-year
pronouncement.
require this board's approval, so
Correct.
we should be aware of that. So Kelsey, can you just let us know what they
And
are
Amy
when-
did
and when
put
we approve
together
them?
a schedule of all of them for us, even the annual ones,
Awesome.
because on the first
Oh,
year
we don't
implementing
need
the
the annual
standard, we look at those annual ones and we make sure
Yeah.
that they are annual ones. Like we don't wanna just assume what we're given, so we take a sample of them and then look at them to make sure that what she
That's
put
to
in that
Art's
spreadsheet.
question.
Got it, okay, great.
But again, this is something that has to be looked at if the status changes and you enter into a very big lease agreement or something, then those asset and liabilities may come into your financial statements,
Sure.
it might go above that.
That makes sense.
Makes sense.
Alright, so moving on to the management letter. We actually didn't have anything new in the management letter, these are still things that have been outstanding for a few years, and I do wanna just make a correction to this slide because it says fiscal year '24. It should say 12/31/24. It should actually be calendar year that Amy's gonna be implementing these things, not by June 30th. So the plan is to have these all implemented by December, not the next 3 months. So similar to previous years, we had the capital asset reporting and just getting that into a system because it's in Excel, and I think you guys are working on that one with expectation that it'll be done by the end of the year. The fraud risk assessment, I think it's in the budget and it
We passed that a
I
while
say,
ago.
yeah, but I think, did it just go out to
It's going
the-
out to RFP
Yeah, so I think Amy
shortly.
just told me it's going out to RFP shortly, I think that's what she said. And then the last one is the accounting procedures manual, and this is just making sure that all your procedures are in one place. If Amy goes and wins the lotto and leaves tomorrow, can somebody pick up her job and just keep the town moving? So that's a document just keeping all of your accounting procedures for the town and Board of Ed in one place in one document. My last slide is on the upcoming GASB standards, because we all love, they keep coming out with these. So for 2024, we have statement 99, which is an omnibus statement. I think part of it was actually implemented in 23, but it's a cleanup statement where, as we went through the lease standards, some technical issues might have come up that they didn't clarify in the standard that they kind of throw into this omnibus and clean up afterwards. It's minor maybe changes to the footnotes or anything like that, so we'll go through that with Amy if there's any. I don't expect anything big to come out of that standard. And then statement 100 is accounting changes and error corrections, and this is just guidance for how to disclose if you have an accounting change or an error correction. Again, I'm not expecting that one to affect the town in 24, but if for some reason there was an error, we might have to just add disclosure with that standard. And then for 2025, we have two standards, 101, which is compensated absences. And what GASB does is they kind of go back through some of the older standards to just make sure they're still relevant. Compensated absences is one of those that there's been a lot of leave changes and different types of leave since they originally came out with the standard. So they're coming up with this new standard or revamping the old one just to put some guardrails around what is considered leave, how to calculate it, just so that all municipalities have that same similar calculation, and they're encompassing some of these new leaves that maybe weren't there when the statement was originally came out. And then statement 102, which is the newest one, is certain risk disclosures, and this is adding disclosures to the financial statements if you have any concentrations or constraints. For example, a concentration if you have your whole all your employees are in the same union. That might hurt the town if they went on strike or something. So or if you buy all of your something from one supplier. So it's just disclosing that the town may have a concentration. And then on the other side of it is the constraints. If there's any if the government or external parties limit revenues or mandate a certain amount of spending, if there's any of that kind of stuff, it now needs to be disclosed. So we'll obviously talk about that as we kind of go through the next couple of years. But that's for 2025.
Calendar year?
No, that's fiscal year, so it'll be 6/30/25. And then the last slide is just our contact information, which, you can always reach out to us. You can always contact us through Amy if you are reading all this fun stuff and have other questions that we can help with.
Thank you. We appreciate all the work you do on this. And great. You always do a nice job explaining it for us. And the presentation was excellent. And your reporting, obviously, I'm very pleased that we have a clean audit. Congratulations to everyone, Kelsey and your office, for all your work on that. I did want to open it up to questions from members of the board. Are there any questions?
You covered all my questions, thank you.
I don't know.
I have one question.
Sure.
It's on intergovernmental revenues. If you go to, sometimes it looks like the Board of Ed has a lot more intergovernmental spending, or there's more intergovernmental than we budget. And I know some of it we don't budget, but I was just wondering what that was.
So there's probably two pieces that go into intergovernmental revenue as far as, so how it's budgeted, that Board of Ed line, because it's one line in your budget. So if there's any tuition that you put against that, or the do we actually have budget gap differences? If you budget for like excess cost money to be against your expenditure line, for the financial statements, we have to take that out and make it revenue and expenditure. So that's one piece. If it's net for your expenditures, because you budget your Board of Ed net that amount, we have to unnet it for financials. The other piece is the teacher's retirement and OPEB piece. That's a big number that we have a revenue and an expenditure for the piece that the state contributes on behalf of the town's teachers. So that becomes a revenue and expenditures. It has no net position effect, but those numbers come on, so you might see that intergovernmental revenue go up substantial because of that. And that this year is
that they require you to report on that? Because we never see those revenues or expenditures.
correct. So the
It's just
pension,
entry.
the pension side is 12 million and the OPEB side was 172,000. So your intergovernmental revenues for the Board of Ed, you're gonna see an additional, 12.5.
So you're probably looking to see $77 million in expenditures, and then you see 90-something thousand dollars
Right.
because of those two big additions in that line.
Got it. Okay, that might be worth putting in a narrative somewhere because
It's usually
is it there?
well, it's on
I
the
missed it.
bottom.
So in the bottom of exhibit RSI 2 is there, but it's unless you know where it is going to be added to, you would not know. But there is a couple places actually in the report, but you have to be very familiar with the reporting to kind of pick up on that. So there is a note here about teachers' retirement, and it says there that the town doesn't contribute anything to the plan, but the state contributes on behalf of the town's teachers, and that number is reported as an expenditure in this exhibit. So that language exists in there. You have to like kind of dig through 200 pages of report to find it. And just went to that page. It's page 63 of the report.
Oh, that's good. Just that you guys were able to find that so quickly.
Because we know exactly what it's supposed to be.
So that's the pension side, and if you keep going to the OPEB note is very similar.
So if you look at, so it should be the third paragraph from the bottom on page 63.
I'll leave you it.
And then OPEB is on 75,
Okay, so that would explain why it looks so huge.
right?
Okay,
Yeah, because those definitely throw those numbers much higher than you might be expecting, because you guys don't really do anything with that the state pension or OPEB fund for teachers.
This is the difference between two methods of accounting that are in these financial statements. On the exhibit 4 where you see $90+ million of education expenditures, that's on GAAP basis. But then what you are working with on day-to-day basis is a budgetary basis, so which is on this exhibit, requires supplementary information in the back. So that makes it, unless you are like really familiar and work with these reports every day like we do, it's not as easy to pick up on that, but that's a great question.
then I guess just a general question, I assume you do other municipalities. Do we budget typically, is there anything you think, Simsbury does it a little different than other municipalities, or is this fairly state of the art?
It's fairly standard, yeah.
Is there anything this committee should be aware of that has not been discussed tonight?
I think so.
Is there anything our organization can do to reduce the time you need to spend or staff needs to spend on the audit?
Well, I did have a conversation with Amy that we've tabled until after this meeting, but Simsbury used to issue before 12/31, which is the state deadline, and then we've had extensions. So we'd like to get back on track, Amy would too, so we're going to have a meeting before the 24 audit and just how we can do that. I know she's had a lot of turnover, and then taking on the Board of Ed position, I think that's all settled down, so we'd like to get this out before 12/31 as well.
So anything you could do, just with our budget, which is dictated by the charter, we don't have any flexibility, so if we could get your report in January or February, make our lives a lot easier.
We like to we like them done by December too.
Is a summary statement be that you found everything that you wanted to find and that you found no material discrepancies? Is that a general summary of what your work yielded?
Yeah, so our opinion says that there are these financial statements are free of material misstatements, yes.
And of the things you did not audit, is there anything we should consider for an audit in the future?
I don't know if there's anything specific. We also do on some of those areas that we might not look at, we have what we call an unpredictability test every year. So we kind of do different things to cover maybe some of those areas that we might not look at that just because there's gotta be that element of unpredictability, like we don't want anybody to get used to what we look at and then try to put something somewhere else. So that element of unpredictability, we kind of rotate around in different areas and look at different things, so nothing's come to our attention in that we need to disclose, but we do that, so I don't wanna say we're always looking at the same things, there is still that little bit of secrets.
Variability.
Yeah.
Let me just make sure whether anything else I wanted to. And last question, your plan of audit to deviate from what you thought you were gonna do, or you went according to as you expected?
No, I think it's gone as we expected. It would, from our perspective, and I think from Amy's as well, we would just like to dial back when the town is ready so that we can get the audit done sooner. I mean, I think when we get things and everything is given to us, there's no issues. There's just that delay and that timing as to when we get it. And then, to be quite honest, if we get things late in November and December, you're just out of time. So we need to kind of hit that October, early November timeframe to get it out the door by 12/31. Because even after, I review it, Nicoletta reviews it, it still has to go to our national technical team, which is a couple weeks turnaround at that time of year because there's just so much that has to go out by 12/31. So we need to, when we were Bloom Shapiro, we might have been able to do it a little bit closer to 12/31 just because we were a smaller office. Now, we have to have everything to them by the middle of December if there's a shot at getting out. So we gotta back that whole timeline up here to be able to hit that.
I have a friend who's in this space and does this fun stuff, and he's firing some of his clients because they can't get their stuff to them in time.
Really?
Oh,
So
so don't do that.
that's a risk. It's just a risk, right?
Yeah.
Because they have to work so quickly to deliver that they're creating risks for themselves.
Right. And I think under CLA, that's why we've seen a lot more extensions. They're not gonna push something out the door because of that risk. Like
Exactly,
they're going to
right?
take
It's
their
like-
time, and if you're on extension because you were in that time frame, you're on extension.
Yeah. And so my
so-
friend is like, I'd rather just not take the business.
Yep.
It's not worth it.
Message received?
Yes. No, so as Jess stated, the past 2 years have been a little rough for the finance department with the turnover and retirements and taking on a little bit more for the Board of Ed. But knock on wood, Amy and I both feel like we are slowly starting to coast, and I'm not gonna say it because I don't wanna jinx us, but we're
And you
starting,
have a system change in there too.
the whole
That
conversion.
conversion is
Right,
gotta
which
be-
is always a little bit,
And that was a really hard part for us because we weren't able to pull like certain reports that the auditors needed, so we'd have to just figure it out, but we'll definitely be in a much better spot this year. I'm confident in that.
Excellent.
Hear that?
yeah, we do.
Well, thank you. We really appreciate you coming in, and we appreciate your good work, and
Thank you.
as always, excellent communication, so thank you.
Thank you. I said we'll just leave these extras to
Perfect,
want
yeah.
this.
Thank you.
Okay, you got
I-
something to do.
I'm gonna do this motion. We have before us a motion to approve the notice of the hearing for April 3rd, 2024. This is just a notice of what was presented to us, not with any changes we're making. It will go out in the press, and then we will, for members of the public, we will likely alter it. We are exploring some alternative financing mechanisms and use of reserves that we hope will get the mill rate down, but at this point, we present the budgets as they were presented to us, and we'll respond after we hear from the public. Alright, so with that, may I have a motion effective March 21st, 2024 to move the Board of Selectmen's budget as proposed and the Board of Education's budget as amended on April 18th, 2024, and forward the two budgets to the scheduled public hearing.
Did you say April 18th?
No, the Board of Ed budget as amended on April 18th. They gave us the amended budget on Tuesday,
March 18th.
March 18th.
March 18th.
March 18th. That's what I said. Thank you. Yeah, that might have been my birthday. And forward the two budgets to the scheduled public hearing in accordance with section 808 of the charter.
So moved.
Second.
Any further discussion? All in favor?
Aye.
That motion carries unanimously. We'll then go on to review of the minutes from March 14th, 2024 special meeting. Are there any changes to the minutes? Okay, may I have a motion to approve the minutes as submitted?
So moved.
Seconded?
Any discussion? All in favor, please say aye.
Aye.
That motion carries unanimously, and may I have a motion to adjourn?
So moved?
I'll second it.
Any further discussion? All in favor?
Aye.
Alright,